What's up, guys? Stas here. Welcome back to another video on this beautiful Saturday afternoon. Somehow, some way, guys, believe it or not, it's like 85 degrees right now in New Jersey. I'm like, what the heck's going on? It's almost November and it's 85 degrees. Think about that for a second. But either way, guys, we're going to break down what's going on in these markets in this video. We'll break down the charts, talk a little bit about Apple stock as they're set to report earnings very soon here, and we'll just go over my thoughts. So if y'all find value, hit that like button, make sure to subscribe, and don't forget to get up to 16 stocks for Moomoo using that link down below. Listen, guys, if you open up your account and fund it with at least $100, you get 5 stocks right off the bat, each of which could be valued up to $2,000, and you get a free share of SoFi stock on top of that. So use that link down below. We'll talk more about that later. And with that being said, cheers. Let's dive into it, guys. So at this point, you know the stock market's been taking a beating, a very big beating, guys. I mean, look, SPY over the past couple of days has pretty much gone down every single day. Maybe we had a break-even day or a little slight green day, maybe one of those, but pretty much every day it seems like we've been going down since the middle of October, where SPY pretty much double topped at about 438 to about 438.50, right? We hit that point here, hit it again here, and now we're pretty much down $27 on SPY in just the past pretty much 2 weeks, or about 6%, which is a pretty big move for an index, guys, in that short of a time, right? 2 weeks, less than 2 weeks. And Triple Q, which is the tech heavy index, you guys know that well. This is an ETF that tracks the tech heavy index. This is down as well over the past 2 weeks from around 373 now to almost 343, guys. In fact, it did get under 343 a couple days ago. So this is down percentage wise, let's see, about 7.5% in just the past couple of weeks. And that brings me to this point right here. I think everything lies on Apple's earnings now, and by everything, I don't necessarily mean everything, obviously, but in the short term, the stock market's rebound, the potential recovery rally, really relies on Apple's earnings, which let me see exactly what day these are on. I think they're on Thursday, right? Let's double check that, though. November, let's see here, guys, November 2nd. That's right. So I believe that is on Thursday. We have Palantir earnings on that day as well, which that's going to be a very big day for both of those companies. We're obviously not talking about Palantir in this video, but look, it's pretty much all on Apple's back right now. If Apple blows earnings out of the park, maybe guidance is strong, we get an overall rally in Apple stock, well, that's probably going to cause a rally in the other big tech names, which thus would cause a rally, most likely, in the overall stock market, at least in the very short term, which you guys saw the title of this video. I mean, I think the markets are a little bit too stretched to the downside now. I think we're a little bit oversold, and we could be due for some sort of snapback. Maybe nothing crazy like SPY going to 450 or anything like that, or 460 again, at least as of now. But maybe some move within this downwards channel, right? Maybe up towards 420, 425 on SPY, and Triple Q, maybe a move towards, let's say, if I zoom in a little bit here, maybe back towards 355, 360. I think we could be in store for a relief rally if Apple does well. I mean, if their stock drops like crazy, I mean, this goes out the window, guys, because this is one of the biggest weightings on the stock market, or in the stock market, in these indexes. But if we do get that pop here, right, Apple starts pushing 175 again, or 180, you best believe we could be in store for some green, maybe at some point next week, man, even before Apple's earnings come out, for all we know. I mean, this thing could rally into earnings. Again, we're seeing their earnings come out on Thursday, the 2nd of November. So pretty much anything could happen here, even before earnings. Let me actually double check. That's on Thursday, right? My mind's freaking everywhere right now, guys. Let's see here what's going on here. Yes, Thursday is November 2nd. That's right. Friday is November 3rd. So what do you guys think? Let me know your thoughts in the comments. And speaking of Apple, let me actually pull this up here and go over what's going on with the company, or some projections for their EPS, revenue, all that good stuff, and some basic numbers here. So bear with me, guys. Let me make my big old head a little bit smaller. There we go. So Apple right now is sitting at a whopping $2.63 trillion market cap. Unbelievable. Their P/E ratio is actually pretty decent. I mean, you could argue it's still pretty high, but trailing 12 months, 28 PE ratio. Not that bad. I'm actually curious, what's their forward PE ratio? If I pull up the statistics page, I should say it here. Yeah, 25 is their forward PE ratio, so that's lower than the trailing 12 months. So, I mean, look, I'm not diving to go buy Apple at these levels. There's no way. But if their PE were to come down to, let's say, a 20, 22, maybe into the high teens, that's where I'd consider adding more to my position. But as of now, I'm just holding on to Apple, guys. You know, this is a stock that I've held, probably for I don't even know how long, many years. And it's one of those that I've said this before on the channel, but, you know, when it gets a bit overvalued, frothy, at least in my opinion, I trim. You know, I trim my Apple position. But if it gets a bit oversold, let's say, you know, last time it got to 120s, 125, not too long ago, I was buying a bit of Apple there. If it gets oversold, I nibble a little bit and add to my position. You know, this is never a stock that I've gotten rid of completely out of the portfolio. Who knows? Maybe at some point I will. But, you know, it's one that I add, I trim, I add as, you know, the cycles with the stock, you know, go on as we see huge spikes and it gets oversold. That's just how I treat Apple personally. So $2.63 trillion market cap, 1.3 beta. It's more volatile than the stock market in general. Makes sense. Again, PE ratio 28. Trailing 12 months EPS roughly $6. Okay, and their dividend yield is 0.5%, 0.6% almost. Let's give it credit. 96-cent dividend, which is really nothing. I mean, you're not investing in Apple for their dividend. It's kind of like the cherry on top, and maybe at some point in the future, they do become a much higher. I mean, they probably will become a bigger dividend company as the years go on. If I had to guess, in 10 years from now, will Apple be paying a 2-3% dividend? I mean, maybe not 3%, but 2%. I think it's very possible. I mean, who knows, obviously. But based on 28 analysts, they're looking to do average estimate, or the average estimate for EPS is $1.31. You guys can see right here, the low is 127, the high is 137, and a year ago they did 129 in EPS. So pretty much right in line with what they did a year ago is their projections. And if we come down a little bit more on the revenue side of things, sales are projected to go down, guys, believe it or not. Based on 24 analysts, $84.18 billion revenues. The average estimate, $82.8 is the low, and the high is $86.89 billion, with a year ago them doing a little bit over $90 billion in revenue. So 6.6% decline in revenue year over year is what's projected here for Apple. Excuse me, guys. Jeez Louise. And, EPS is pretty much right in line with what they did last year. So, of course, guys, I mean, the size of Apple here, $3 trillion market cap almost. It was a couple months ago, right? It's now 2.63. It's going to be very difficult for them to continue growing, 10, 15% year over year. At some point, they're going to stagnate, decline a little bit before maybe popping up again. We'll see, and it looks like that's kind of the time period that we're in right now. And I'm actually very curious to see how the holiday quarter is going to go, which obviously we won't get those numbers for another couple months. But, yeah, man, holiday quarter for Amazon and Apple, those are going to be huge to look out for. And these are both stocks, full disclosure, that I own, Amazon and, of course, Apple. So, yeah, guys, that's a quick little rundown here. Nothing crazy. I mean, it all comes down to Apple. Like I said, I think overall, we are in store for some sort of spike in the markets. Nothing crazy, but I think we are getting a little bit too oversold. And sure, if something comes out next week out of left field around the conflict in the Middle East, or we get some huge economic news, I don't know, guys. Anything could happen. There's a lot of craziness going on, uncertain times. This could go out the window, and maybe stocks go down even more. Maybe the VIX spikes up 20% for all we know on Monday. I don't freaking know, guys. But overall, we're a bit stretched to the downside. I mean, it's pretty obvious on SPY here, so watch out for some sort of spike. Triple Q as well. What do you guys think? Let me know in the comments. Hit that like button. Make sure to subscribe here on YouTube. It's free. And follow me on X at Stas Talk Stocks. Link down below. And if you haven't gotten your free stocks yet from Moomoo, what are you waiting for? Use that link down below, or just go to StasSurFast.com/Moomoo. Once you open up your account and fund it with your initial $100 deposit, you get 5 stocks right off the bat, each of which could be valued up to $2,000, guys. And you also get a free share of SoFi stock on top of those 5 stocks. That's just this with a $100 deposit. And if you fund your account at least $1,000 on top of those 6 stocks, you get 10 more stocks totaling 16 stocks, each up to $2,000, guys. So use that link down below, get your money. And of course, that is an affiliate link. It helps out the channel. And with that being said, cheers. I'll catch you guys later.